Now let us come to the foreign exchange market, the market that we are supposed to discuss for the entire module. And here I am going to discuss a lot of things. I would like to go into the lot of technicalities of the foreign exchange market first so that you understand. See, there are two ways of studying. There are two ways of going through this module. One, I directly start discussing about technical analysis, derivatives, and then coming to the strategies so that you can directly start applying the strategies. Second, first we understand the basics, how the market moves. And then understanding this will help us generate a better trading strategy so that whenever the market changes the direction or whenever the market changes some of the fundamentals, you should know which trading strategy, because the trading strategies are different for different products. Let me give you an example here. I want to give you a very good example. Please listen to me carefully. Guys, when, for example, let's say Paytm shares or Zomato or for that matter Adani Green or Mahindra and Mahindra, any of these shares have shot up by 30% to 80% whatsoever in the last 3-4 months or so. Is there anyone who should be worried about this, assuming that no one has shorted these shares, no one is doing a short selling? Is any regulator worried about this? If it is not a manipulation, I don't think so. No one should be worried about it. It is good for everyone. And even if the prices fall, then the market must be following an efficient price discovery, and the prices have fallen by 30%, 40%, 70%, 80% whatsoever. No one is going to get bothered about these companies, whether the prices go significantly up or the prices collapse. But tell me one thing. For example, crude oil prices have shot up from around, let's say $60 to $140 per barrel. Is there anyone in the world who should be worried about this? The OPEC nation should not be worried about it. Not everyone. Let's say the consuming nation should be worried about it. The country is dependent on energy imports, and someone will be acting on this. Like for example, India will start consuming less of crude. India will start consuming less of crude and might shift its focus towards renewable. Of course, it is not very frequent, but then we may at least start thinking about it. When crude oil prices collapse, again, is there anyone who should be worried about this? Of course, yes. The producers, they will start producing less of crude oil now. One more example. Dollar prices against INR have shot up from around, let's say 74 to 85. Again, the same question. Is there anyone who should be worried about this? The importers in the country should be worried. And also, I need not reply now that if the market collapses, if dollar depreciates sharply against INR, then exporters should be worried about this, and someone will be acting on this. RBI will start accumulating dollars. Here, RBI would be selling dollars, as we have seen recently. They have depleted their foreign exchange reserves by approximately 11%, and it is a matter of worry for India. Now understand one thing. In the first case, we were talking about equity securities. Again, using technical analysis, using derivative strategies, we can trade equity securities. The same way USD INR goes up, might come down because someone is acting on this, goes down deeply, might go up again, goes down deeply, might go up again, and may not act like equity securities. Agree with me? Yes or no? Trading in equity securities is slightly or require a different mindset compared to trading in currency securities. or also the commodity securities.